Let me ask what's going to set you apart then in the race towards renewables, in the energy transition. Many energy businesses are turning to renewable energy. What will set you apart from the others?
First of all, good morning. I think the first thing is that we have a strong track record investing in the renewable space. We've already been doing this for 15 years. We have 20 billion euros already invested in the renewable space. And as you said, we have the plans to invest another 24 billion over the next 5 years. So we have the track record, we have the team, we already have the global footprint, and we have the projects in place to continue to invest profitably in all the different geographies.
In terms of the types of renewable energy, wind energy has always been central, or has been recently central to your strategy. Now solar seems to be taking the spotlight as well. What's happened to solar to sort of push it up your agenda?
So I think one of the global trends that we've seen is really all the renewable technology costs coming down and really becoming very competitive against the more conventional technologies. In fact, nowadays, renewables, wind and solar are by far the most competitive in the market. Solar has obviously come down a lot, and so it's obviously taking more of a market share. And so we see more potential growth for solar also over the next couple of years. So really, in terms of our mix of investment over the next couple of years, we see it pretty much evenly split between wind onshore and solar. And we see that both in Europe and in the US, which, as I think you mentioned, we have 80% of our investment going to both of those geographies. So US and Europe spread throughout. So not only Iberian Peninsula, but places like France, Italy, Poland, Romania, UK. So we're investing in all of these different countries.
Are you interested in acquisitions in the solar space? Is that where you're looking?
No, we've done most of it organically. As I say, I think we have already a strong track record. We built up the teams. We know how to do the development on the ground. And what we're seeing is a lot more projects that we are able to develop in the different geographies. And solar is becoming, as I say, very, very competitive. And we've been doing that already with our teams, building up the pipeline. We have more than 40 gigawatts of pipeline that we've developed over the years. And so we're beginning to bring those projects online. We already have over 7 gigawatts that have been secured over the next couple of years for 21, 22, and 2023. And what we're projecting is that we have a total of around 20 gigawatts over this period, 5-year period until 2025. So it's a very strong, very ambitious investment program that we have over the next couple of years. But as I say, I think this is really a multi-decade trend, multi-decade macro trend that we're seeing. And so we certainly expect growth to continue to ramp up. Just to give you an idea, I mean, we're basically doubling the pace of growth versus the previous years. And we think it can go even higher than that. And this is clearly, if you want, our stepping up to the challenge of the climate change. I think it is a major macro trend, and we are seeing that across all geographies, across all regions.
I just want to jump into the conversation, Miguel, and bring some comments from an ECB Executive Board member, Schnabel, speaking at a virtual event, a red headline across the Bloomberg. Schnabel is saying that the ECB may need to add support if yields hurt growth. And that's interesting in the context, for viewers who've been with us a while, in the context of the conversation we were having with Ian Steely earlier about how Europe maybe is more worried about this push up in yields than the US at this point. And Miguel, that brings me back to you. Are you concerned about a rising bond yield environment, either because of what it does to your own funding costs or because of what it does to the relative attractiveness of renewable assets at this point?
I think fortunately not. First, we've significantly reduced our leverage, so we have already a pretty comfortable balance sheet. Most of the assets we invest in are inflation linked, and so they are able to withstand, let's say, any impact that might have there. In terms of the actual interest rates, I mean, we've already built that into the business plan, so we're already assuming some increase in interest rates over the course of this next couple of years. So I think as long as it's reasonable, you know, that's perfectly acceptable and perfectly doable. I mean, I just think that with all of the growth, obviously people will adapt, they will adjust their returns accordingly going forward, obviously assuming that it's within moderate rates. So I'm not overly concerned about it.
OK. In terms of the structure of your business, EDPR is in focus. This is the Renewable Energy Unit. When do you think you might have a decision on that unit issuing new equity?
So as you say, EDPR is a listed vehicle. It's been listed already for 12 years. At the appropriate time, and we haven't specified exactly when, we could issue around 1.5 billion euros of equity, basically to finance this plan. So it's, as you mentioned, it's 24 billion of total investment that we're doing, around 20 billion, 19 billion to be invested specifically in renewables. And so we think EDPR is the right funding vehicle to do it in. So it's had a fantastic performance over the last couple of years. It's had a great track record in terms of building out its installed capacity, both in Europe and in the US, which are its primary markets. And so we think that bringing in fresh equity and allowing us to fund this plan going forward would be a great way of doing it. As I say, we haven't specifically given a time frame for it. It will be at an appropriate time to institutional investors.